Renren, otherwise known as China's Facebook, went public in May amid tremendous enthusiasm from investors, only to have that enthusiasm cool. The stock is now down over 60% since the IPO. Renren's base of 130 million registered users is growing fast, but its foothold on the Chinese market may one day be challenged. I sat down with CEO Chen earlier and asked him for his thoughts.
Obviously, the overall market has calmed down quite a bit since we went IPO, and I think with the global financial crisis, particularly in Europe, and the slow growth of most of the economies globally, I think the risk premium has went up quite a bit. So high growth, high PE stocks, companies like us get impacted the most as a rule in finance. But we're fundamentally bullish about our company. That's why we announced a $150 billion stock buyback recently, and we intend to buy back our stock at in the next year and build shareholder value that way.
Now, U.S. regulators, it was just announced, are looking into possible accounting frauds at Chinese companies, and Chinese internet stocks have taken a hit kind of across the board over the last couple of days. What's your view on what exactly is going on there?
I think a portion of the U.S.-listed Chinese companies when listed through a backdoor listing, which means acquiring a shell company on the exchange and basically went IPO that way. So sort of went IPO silently without any major marketing, and they don't raise that much funding either. But the number of those companies are quite a number, maybe a few dozen, and unfortunately that's dragging down the whole sector.
So what has Renren's interactions been with U.S. regulators? What do you do to convince them that you are trustworthy and that the company can be trusted?
Well, our policy is always full disclosure and transparency. If we have anything that's significant, we always disclose. And that's why, for example, our stock buyback, we always wanted to do it, but because we have a pending acquisition, 56.com, which we recently completed, we have to wait until that's done to announce the buyback. So those are the type of extra steps and cautions that we took to make sure that we comply to all the regulations.
Jack Ma recently made some headlines when he spun off a very valuable asset at Alibaba, unbeknownst to shareholders, including Yahoo. Do you worry at all that that could reflect poorly on Chinese entrepreneurs and companies as a whole?
I worry a lot about that. And when Jack hears about that, he's probably not going to be happy about it. And I was pretty vocal in Chinese domestic media about this whole thing. I was hoping that the issue can be resolved well, but it's quite unfortunate that happened because Jack always commanded a lot of my respect because we both are invested by SoftBank. I look upon him as a pioneer in our industry, but unfortunately this happens, and I think that as an industry we just need to think through and think about the best ways to solve this issue. But I think that eventually this will be solved, and that's why, despite all the uncertainties out there, we decided to launch the stock buyback.
So talking about your business, how much would you say that gaming is going to be part of Renren's future?
Well, gaming is becoming, last year, or even before we went IPO, gaming was more than half of revenue. But because our advertising is growing so strongly, almost 100% growth year over year, now it's more than 50%. And so I told the audience today that That's also going to change because I think 3 years later or 5 years later, e-commerce will be our #1 revenue.
Let's talk a little bit about Facebook.
Yeah.
Facebook is still blocked in China, yet Facebook does have a few employees there. Do you know anything about Facebook's plans in China? What do you think they're up to?
I know the guys there, but they never tell me about it. I think they're certainly very interested in China. Mark made a trip to China, last year, and he's very interested in Chinese market. He's trying to learn Chinese. I always say that I think eventually the social graph in each country will have some kind of interaction. It's sort of like if you're AT&T cell phone user, you go to China, you should be able to talk, right? So after all, we're operating a communication network. So I think if you're looking at 10-year, 20-year horizons, all these social graphs will be connected. So whether Facebook need to be China or not, if you're AT&T, do you have to own an infrastructure in China to provide service for users? Right, so those are the questions to think about. But in the near term, we think that most of the competition will be coming from domestic players, which are very, very entrenched and very strong, but many times bigger than us. So we are almost like underdog trying to fight with the elephants.
There's been speculation about a Facebook partnership with potentially Baidu or some other Chinese company. Do you think a venture like that would succeed in China?
Hard to say, right? Hard to say, but I think most of JVs don't work in China, just statistically. But it doesn't rule out any outstanding JVs. I think the difficulty of a social networking company working with a non-social networking company, it's very difficult to get expertise crossed, because our business is actually quite intricate and it looks kind of, on the user side, it's very friendly, but there's a lot of computing and technology behind it. So I think that it's more difficult than most people think.
Do you have any advice for Mark Zuckerberg?
I think he's doing a fantastic job. I think he should look into e-commerce a little bit more aggressively, because we think that for us, that's the way to monetize in the future. I think for Facebook, I think that's absolutely the future. He should be more aggressive on payment. And they're very good on mobile now, but there are very strong competitors out there, Apple and Google. So they need to figure out their partnership. And this, in my view, right, the mobile internet, the future of the internet is mobile, and the future of mobile is really going to be determined by the companies that control a vertically integrated platform, including services, operating system, and hardware. I mean, Apple is the closest you can look in that regard, and that's why they're the most valuable company for now. But I think that Facebook and Google and Microsoft, they all want, even including Amazon with their ambition there, they all want to become integrated players or part of the integrated coalition. And the biggest business on mobile is App Store. Right? You already have the Apple App Store and you have Android App Store, and I think Windows will offer on App Store. So Facebook and Amazon are the two other companies that has the asset to build App Store business. App Store is the new search on mobile. So that's the holy grail for the internet business here. They need to think hard on that.